Hello everyone, and welcome back to the channel. Today, we're diving deep into a topic that affects everyone, from international travelers and investors to small business owners and even online shoppers. The global currency exchange. Specifically, we're putting our crystal ball to the test and looking ahead to 2025 with a special focus on the Canadian dollar. What's in store for the loonie? How will global trends impact its value? And what does this all mean for you? Stick around because we're about to unpack it all. First, let's set the stage. The foreign exchange market, or Forex, is the largest financial market in the world. Trillions of dollars are traded every single day, and the value of each currency is constantly shifting based on a complex web of factors. These include economic indicators like GDP growth, inflation rates, and employment data. They also include central bank policies, geopolitical events, and even market sentiment. It's a dynamic and sometimes unpredictable environment. So what's the big picture for 2025? Many economists are pointing to a few key global themes. First, the ongoing battle against inflation. Central banks around the world, including the U.S. Federal Reserve and the Bank of Canada, have been raising interest rates to cool down their economies. The big question for 2025 is whether they will have achieved a soft landing, that is, taming inflation without triggering a major recession. The path of interest rates will be a huge driver of currency values. If one country's central bank starts cutting rates while another holds steady, you can bet their currencies will react. Another major theme is geopolitical stability. Trade relationships, international conflicts, and political elections can all send shockwaves through the currency markets. For example, the relationship between the U.S. and China continues to be a major factor influencing global trade flows and investor risk appetite. Any major shifts in these dynamics will undoubtedly ripple across the Forex landscape in 2025. Finally, we have commodity prices. This is where Canada really enters the spotlight. The Canadian dollar is known as a commodity currency because its value is closely tied to the price of natural resources, especially oil. Canada is one of the world's largest oil producers, so when oil prices go up, the loonie typically strengthens because it means more foreign currency is needed to buy Canadian oil exports. Conversely, when oil prices fall, the loonie often weakens. Now, let's zoom in on Canada and the outlook for the loonie in 2025. The Bank of Canada's monetary policy will be front and center. By 2025, we'll have a much clearer picture of how successful their rate hikes have been in controlling inflation. If the Canadian economy shows resilience and inflation is under control, the bank might have room to maneuver, potentially holding rates steady or even beginning a gradual cutting cycle. This path, especially relative to what the U.S. Federal Reserve is doing, will be the single most important driver for the USD/CAD exchange rate. Historically, the U.S. dollar and the Canadian dollar have a very close relationship. The U.S. is Canada's largest trading partner by a huge margin. Economic performance in the United States has a direct and immediate impact on Canada. If the U.S. economy is booming in 2025, demand for Canadian goods will likely be strong, supporting the loonie. If the U.S. enters a slowdown, the ripple effects will be felt north of the border. Most analysts will be watching the interest rate differential, the gap between the Bank of Canada's policy rate and the U.S. Fed's rate. A wider gap in favor of the U.S. tends to strengthen the U.S. dollar against the Canadian dollar, and vice versa. So, what are the forecasts saying? It's important to remember that forecasting currency movements a year or more in advance is incredibly difficult. However, we can look at the general consensus. Many analysts are cautiously optimistic about the Canadian dollar's prospects for 2025. The thinking is that if global economic growth stabilizes and demand for commodities, particularly oil, remains firm, the loonie could see some modest appreciation. Projections for West Texas Intermediate, the benchmark for North American oil, often hover in a range that would be supportive for the Canadian economy. Furthermore, Canada's fundamentals are relatively strong. The country has a stable political system, a well-regulated banking sector, and a sound fiscal position. Another factor is immigration. Canada has one of the most ambitious immigration policies among developed nations. A growing population fuels economic demand, fills labor shortages, and contributes to long-term growth, all of which are positive underlying factors for the currency. However, there are risks to this outlook. A sharp global recession would hit commodity prices hard, dragging the Canadian dollar down with them. The Canadian housing market is another area of concern. High household debt levels make the economy sensitive to interest rate changes. If high rates cause a significant downturn in the housing sector, it could weigh heavily on overall economic growth and weaken the currency. So, while the base case might be cautiously positive, there are definite headwinds to watch out for. So, what does this all mean for you in practical terms? Let's break it down. If you're a Canadian planning a trip to the US or Europe in 2025, a stronger loonie is your best friend. It means your dollars will go further when you convert them, making your vacation more affordable. If you're an online shopper buying from US websites, a stronger loonie means those prices in US dollars become cheaper for you. For Canadian businesses that import goods, a stronger loonie is also great news. It lowers the cost of bringing in materials and products from other countries. However, for Canadian exporters, it's the opposite. A stronger loonie makes their products more expensive for foreign buyers, which can hurt sales. They often prefer a slightly weaker dollar to stay competitive on the global stage. What about investors? If you're a Canadian who invests in US stocks or assets, the exchange rate is a key part of your return. If the US dollar weakens against the Canadian dollar, the value of your US investments will be lower when you convert them back into Canadian currency. This is known as currency risk. Some investors use hedging strategies to mitigate this, but for the average person, it's simply something to be aware of. So, how can you prepare for 2025? The first step is to stay informed. Pay attention to announcements from the Bank of Canada and the Federal Reserve. You don't need to be an economist, but having a general sense of the direction things are heading can help you make better financial decisions. If you have a large foreign currency transaction coming up, like buying property abroad or making a big purchase, you might consider strategies to manage exchange rate risk. Some people use forward contracts, which allow you to lock in an exchange rate for a future date. This provides certainty, though it means you won't benefit if the rate moves in your favor. Others might choose to convert their money in smaller chunks over time to average out the exchange rate. For travelers, it's always a good idea to monitor rates as your trip approaches. Exchange rates can fluctuate daily. Using a credit card with no foreign transaction fees is also a great way to save money when you re-abroad, as you'll typically get a rate that's very close to the market rate. In conclusion, the outlook for the global currency exchange in 2025, and for the Canadian dollar in particular, is a fascinating mix of interconnected factors. The dance between central bank policies, commodity prices, and economic growth will determine the direction of the loonie. While the base case scenario appears to be one of modest strength, driven by stable commodity markets and solid fundamentals, risks from a potential global slowdown or domestic housing market stress remain. The key takeaway is that currency fluctuations are a normal part of our global economy. By understanding the forces at play and thinking about how they might impact your personal finances, you can navigate the changes ahead with confidence. Whether you're traveling, investing, or running a business, a little bit of knowledge can go a long way. Thank you so much for watching today. I hope you found this deep dive into the 2025 currency outlook helpful. If you have any questions or your own predictions for the Canadian dollar, please drop them in the comments below. I'd love to read them. And if you enjoyed this video, don't forget to hit that like button and subscribe for more content on finance and economics. We'll see you in the next one.